Hi friends, this is your stock market shrink again with the boring voiceover. Have you ever been tempted by the promise of any easy scheme or method that will double your money in the stock market? No, this is not a clickbait, but definitely designed to drill few messages hard enough to be not forgotten. If someone offers to double your money, simple advice: turn around and run. What will follow are few maybe obvious but very important notes to minimize losses. For only if we cut losses can we eventually start making money in the stock market. It is often said that the market is the best teacher, and unless we lose money in the market, we don't really learn. But it did not always be so. Disclaimer as usual: none of the following should be considered as any stock market recommendation or advice. I will start with the point of not trusting research reports blindly with an example. On October 11th, 2018, there was a news report about a Bank of America research report on the graphite twins HEG and Graphite Limited. They initiated coverage that sent both stocks to their upper circuits. HEG 20% up to 3,870 odd, and graphite 5% up to 830 odd. The target price for HEG was set at 6,700 and for graphite at 1,550. Do note the strong endorsement for both the stocks. We see a multi-year earnings driven by a super cycle in graphite electrodes used for electric arc furnaces steelmaking. Its valuation does not appear to have correctly priced the strength and longevity of this cycle, the bank said. And how did the stocks react thereafter? HEG and graphite did keep moving up. HEG crossed a threshold of 4,000 but soon started a downward trajectory that would take it to a low of 410 or thereabouts. The thing with cyclical stocks is that they keep moving up and down in line with the commodity prices. And if anyone wants to try predicting the commodity prices, good luck with that. But more importantly, if an investor had blindly followed the research reports, would have ended up losing around 90% of capital at the lowest point. But if you do have an investment horizon that is long enough for a commodity cycle to turn, you could recover at least a part of the losses as prices move upward post a recovery in underlying commodity prices. Moving on to the next point. With the rise of online forums, it is quite easy to fall to the trap of borders on discussion forums until we lose some money and realize the fact the hard way. Of course, there are online forums where you can get good ideas, but these need to be backed by independent analysis. On hot SMS tips, less said the better. Just delete them permanently and consider these online forum discussions and hot SMS tips as strictly for entertainment purposes only. Moving on to the next point, while generally TV shows are quite informative, again, we can't trust them blindly. The recent article on SEBI banning a show host for prohibited practices is an eye opener. You can Google to get more details on this, but suffice to say that investors beware and be aware. And moving on to the last point for today. Intraday trading sounds exciting and action packed, but the issue is that shorter the time period, you are up against high speed algorithms that crunch data faster than we can even imagine. They are experts in triggering stop losses that you may have set. They are masters of derivatives, your futures and options. And shorter the time period, the tougher it is to beat them. So, what do we do? If we can't reach their level, bring them to our level by choosing a time period that is long and deal with stocks that we know well enough. In summary, if we follow some of these and not burn our fingers, we can slowly and steadily start understanding the market movements and make steady returns. Whenever I have looked for steady returns, the returns have exceeded expectations and, in cases, also doubled the money. And whenever I've turned greedy, I've lost my shirt. So, to repeat, Don't trust research reports blindly. Enjoy the discussions on online forums and hot SMS tips, but ignore for investment decisions. Be wary of TV recommendations. Ideas can be good, but not foolproof. Try not fighting algorithms in intraday trades and in derivatives. Well, that's it from me for now. So long until the next video to unravel more on the market and its psychology.